what to expect you can, increase your spending by effectively. If you win $1 million, I would say you're going to limit, that's really going to only affect you. Like you get an extra 20 grand a year after everything. If you want that money to grow.
Yeah.
So that's really like, oh, okay. Well, all right. That's a nice vacation. I mean, great. All right. Wonderful. Because $1 million, if you got a 6% return, that would be $60,000. If you did one of the things we would recommend where you don't pay taxes on it, you get that 60 grand. If you do have to pay taxes on it, you're really left with 40 grand. Well, you can't take all the 40 grand because there'll be nothing left. So you need to invest that other 20 grand. That's what we're saying, 20 grand a year. So wait, $1 million, 20 grand a year? You see what we're talking about? So it's the same thing. So $10 million, 200 grand a year. Like, okay, so I won $10 million. I could live like somebody who's got, a couple who's got 2 good jobs.
Yeah.
All right. What are their lives like? Well, they have a nice house and they might have a pool. And instead of a Nissan, they might have a BMW. Okay. So now, all right. So you see where you have to get up and how it really is. And
wow.
So, 200 grand a month, you're not, do these people pay for everybody's lunch? No. They're just, that's
200 grand a year.
200 grand a year. Right. 200 grand a year. You're talking about, in Connecticut and a lot of high class, that's middle class. And if you're in New York, Manhattan, you're poor, man.
You got a tiny little apartment.
Right. Yeah, you're hanging in there by a thread. So that's some of the things you have to look at. It's like, yes, that's a lot of money up front, but when you break it down to what you're going to have, what your monthly budget should be, kind of think of those rules of what you should be spending on. So $10 million, $200,000 or $200,000 a year. Something like $20,000 a month to spend, $18,000-$20,000. And as you go up, and it depends on how aggressive you want to be. If you want to deplete, if you're looking to leave anything behind, if you're looking to reinvest, or you're just like, well, look, I don't care about heirs. I don't really care about the principal. If you're older in life, you don't really need your money to last you all that long. Okay, you can increase it. But that's sort of, I think that's an alarming number. That it's really only that, $10 million only gets you an upper middle class lifestyle?
Wow.
Yeah.
All right, so taking action, something you said twice now that really caught my ear was budget. I think when people win the lottery, they throw a budget out the window. Because they have all the money in the world. So come up with a budget.
Yeah.
You could potentially make mistakes that can ruin you.
Yep.
You don't think so because you have all this money, but now it's big money. You're talking big mistakes.
Right.
And you're going to get taxed a lot.
Yep.
Right off the bat.
If you don't, right. You'll be withheld at 25%.
Yes, the 25% federal, and then state varies.
Right. But if you do some nice tax planning, there's ways to get that money back. If you do some there's some elaborate things. We're not going to get into those today, but there are things you could absolutely do to drastically reduce your tax liability forever. And now hopefully people are seeing that really, because it's not your monthly amount isn't what you think it is. You really don't want to pay a lot in taxes because it's really not getting what you need to get every dollar to work.
Yep.
Just because you got it all, you got this all, for a small amount doesn't mean you shouldn't take care of it. You shouldn't be reckless with it.
Okay, so first question people generally ask when they win the lottery is, should I take lump sum or the payments?
Yeah. And my answer to that is likely a lump sum. And the reasons why is because from a planning strategy, that I would want to fund the things that we're going to do. We're going to want to fund a trust. If we're going to do some elaborate planning, it's a little easier with that lump sum to do it once and do it right.
Right.
Okay, because with an annuity, it's a little bit more complicated, and if you mess one year up, it could have consequences. I would say it's a pretty well secure. The annuity is pretty well secured, but in Connecticut, I believe the lottery is a private company now, and I'd be a little wary because, and also the other thing is we don't know what future tax rates are going to be. And you could avoid any risk of future tax risk by putting something into a tax-free investment. That doesn't matter. Tax rates could go up to 100%. You don't care. You're not taxable. So that's really why I would want the annuity, so I can take immediate control and get it done right and get it done once instead of having this ongoing thing. And then also, you won't have the risk is that our client did of like, well, I need the money now.
Okay.
And then take a 12% cut. That's just really, really hard. So I think you get a better control.
IRSMedic, the law offices of Parent LLP, real tax attorneys for tough tax problems.